Welcome everyone to App Properties 2019 Market Outlook. I'm Peter Olesker. This is a new project we've been working on at App Properties, a quarterly webcast to keep buyers and sellers informed on what's happening in the market. And I'm really excited to have with us today the co-founders of what is now the largest residential brokerage firm, not only in the city of Chicago, but the entire metro area, Thad Wong and Mike Golden. We're in the award-winning sales center of 1000 South Michigan. It's a brand new condominium development on Grant Park, designed by Chicago architect Helmut Jahn. I think it's only fitting that we're talking about trends in this building, which is really a trend-setting building. 40,000 square feet of amenities, a lot of firsts for Chicago. Everyone always has a lot of questions this time of year. How's the market? Is it a good time to buy? Is it a good time to sell? Big picture, before we jump into the neighborhoods and the data, what are you guys hearing out there?
Everything we're seeing and everything we're hearing is fairly positive. It's not a skyrocket that everyone's looking forward to, but at the same time, it's a very stable market where sellers feel like they can sell at a market price and buyers feel like they can get what they're looking for at a fair price. So once you have that equilibrium going, things are pretty good.
Anecdotally, just talking to our brokers, they're busy. They got busy late last year, and as they roll into the beginning of the spring market, they have a lot of new product coming on the market. There's a lot of new listings coming, and the good news is there's also a lot of buyers that are definitely poking their heads out, especially with the retraction of interest rates a little bit. I think people are looking to jump in a little bit earlier. It feels like the spring market's getting going and getting rolling a lot faster than it did last year.
Let's talk about mortgage rates a little bit. As of right now, rates are in the low to mid fours. They're expected to push into the fives maybe this year. There was a lot of furor last year when rates started to creep close to 5%. But if you look historically, rates are still incredibly low. I mean, even back in 2006, rates were close to 7%. In the early 90s, they were above 8%. If you go all the way back to 1980, rates were close to 20%.
It's all perspective. When I bought my first place in Chicago in, I think it was 1994, I had a 5-year ARM at 9.25%. And I didn't even think about it. It was just, that was where the rate was. People will definitely have to get used to not having 3.5% interest rates. But the reality is 4.5%, 5.5% are still incredibly low rates. Still very, very compelling for buyers. I don't see anything on the interest rate horizon that will have any kind of long-term effects on, I think, our buyers. I think short-term, there'll be short-term bumps when the interest rates go up, but long-term, I can't imagine that until we start seeing sevens, that we really have an issue.
As far as rates too, the interesting thing is that when the Fed raised rates and called that they were going to raise them 2 more times this year, you saw a drastic pullback in mortgage. So mortgages came down about 0.5 point. And now what's interesting is that they're anticipating potentially that there will not be another rate increase. Wall Street has not priced in another rate increase, which would mean that our rates are only going to stay lower for a longer period of time. So for our growth, slow and steady, right now mortgage rates are helping us astronomically.
And I also think buyers too have a little perspective. After seeing rates creep close to 5 last year, now that they're back down, they're realizing that if you're going to buy, this is the time to do it. Lock your rate in now. So that's perfect timing for the spring market.
Let's talk a little bit about home prices. Nationally, home prices grew around 5% last year. In Chicago, the Illinois Association of Realtors numbers just came out, and prices were up 3.2% for 2018. Is that a good number?
I think 3.2% is great, but I also think that it's similar to taking the temperature of the United States of America. It's great to know that America is right now 66, but it's only 15 here in Chicago. So every single neighborhood, every property type has different demand and different supply. And so because of that, you see some stronger price appreciation in areas potentially with good public schools. And you see some price lagging on some of the larger, older, dated homes where buyers are coming in and feeling like they need to do work. And right now we're seeing in the market that buyers don't want to do work. So it's interesting to see how those indexes follow through and how they flow, but in all reality, your home might be the opposite of what the index is indicating. And so it's dangerous to look at that as being a leading indicator of how you should price your home.
One of the things about Chicago marketplace is that we don't seem to boom and bust like a lot of the other parts of the country. So while some areas are up a lot, but then they go down a lot, Chicago is more like steady Eddie in the marketplace. So I think one of the good things about making an investment in our marketplace is while you may not be able to catch the huge price appreciation that happens for a moment in time, you generally have a steadier, a more stable asset when you buy real estate here. And I think people have recognized that as we've gone through some cycles and we haven't seen the massive ups and downs of other markets.
We are an amazingly affordable city in comparison to New York, San Francisco, Los Angeles, even parts of Houston. You know, Chicago is the most desirable city to live in, and ironically, we're the most affordable.
Any predictions for 2019 pricing? One source, a regional economist, had prices increasing 3.9%, so actually doing a little bit better this year than last year. Care to take a guess?
I think we'll see continued appreciation in some of the gentrifying areas, Humboldt Park, Logan Square is far down that path. In the areas that have great transportation infrastructure, good public schools, stabilized housing stock, I think honestly it's going to be a little flat. Some houses may be anomalies, some houses might go down a bit, but I think for the most part it's going to be very stable.
Getting back to that survey that we sent out, one of the questions we asked was, is 2019 going to be a buyer's market or a seller's market? About half of the respondents said buyers, 35% said sellers, and the balance said it'll be even. What do you think, Thad? Buyers or sellers market?
I think it's slightly a buyer's market. The one caveat is that these buyers in today's market do not want to do any work. So the housing that we're seeing, which is not selling most often, is housing that is 10 or 15 years old, which one would think is almost new, but in reality, these buyers are viewing that as being dated. And so they're paying a far greater premium to get a house that's perfect, that they don't need to update. So you're seeing now a lot of sellers do more work before putting their house on the market because they're seeing that the discount that they're having to give in selling a house as is much more drastic than they're willing to accept.
Mm-hmm. Mike, buyer's market or a seller's market in 2019?
You know, it feels pretty balanced right now. To me, it feels pretty balanced. And you know, as I had said, it's really variable because if you've got new construction ready to go, it's almost more of a seller's market. Not necessarily new construction that you have to wait years for because there's uncertainties there, but new construction ready to move into now, I feel like as long as you're priced reasonably well, there's a lot of demand for it because people want new. But people don't want a project right now. They don't want to hassle with it. So I think that in many cases, sellers haven't come to reality for what that looks like if they don't want to do the work to bring their house up to today's standards.
Let's talk about the neighborhoods. So let's bring in two vice presidents, Jim Barcelona from the western suburbs and Kim Kurbis from our Goose Island office. Hey, Jim. We definitely are seeing some trends in the marketplace, and I think you can really view them through the lens of a few neighborhoods. And one of the ones that we wanted to talk about right off the bat is Humboldt Park. It's really interesting. We're talking about slow price growth throughout the market, but in Humboldt Park, we're seeing 25% year over year average price increase, which is just unheard of. In the last 3 years in Humboldt Park, the average sales price has doubled. Inventory month supply of inventory is pretty low, 3.2 months. Usually you'd see, 5 or 6 months would be a balanced market. And market time is also coming down in Humboldt Park. So all these indicators point to the fact that it's just a really hot market. Kim, I'll start with you because you're in the city. What's going on in Humboldt Park?
I think you've got movement from River North to Bucktown to Logan, moving west to Humboldt. And I just think it's a matter of, finding a good deal and a great location. As you guys were talking about before, transportation is key. The school districts, the improvement of school districts will follow that trend, but I really just do think it's a matter of people trying to find the best value that they can, and they just tend to move north and west in the city.
Do you think that its growth what percentage of the growth do you think is allocated to the fact that they opened up the 606?
I think it's huge because it literally is a runway that takes you to Humboldt. And then you've got the actual park, Humboldt Park, and then you've got Garfield Park, and then you've got now the 606, which is, the yellow brick road to a whole new neighborhood that I think a lot of people weren't really aware of. And you see huge amounts of restaurants going in and bars and, obviously it's gentrification. But that is the development of the neighborhood.
Yeah.
It's interesting because the 606 could potentially connect all the way to Lincoln Park with the Lincoln Yards project. So you could have a linear park that goes from basically the Chicago River, Lincoln Park, all the way out to Humboldt.
Yeah. That'd be amazing.
And actually, keep in mind, I mean, they were talking about the 606 trail 20 plus years ago. We just have literally been holding our breath for that. So the fact that it actually happened, I think it just really energized. I mean, it energized the community, but it really energized those neighborhoods.
Well, we remember back in the day, you know, Thad and I, when we started selling, we sold in Bucktown and Wicker Park. That was our first neighborhood, and the 606 was something that they talked about, but it never gained any traction. And we did developments right along that old train track. And there used to be a train that would go down there and would run right by a big townhome development that we sold years ago. So it's really exciting to see Humboldt Park kind of come into its own, because it was always sort of in the shadow, and it was always the area that wasn't quite there when we saw a lot of the gentrification, even west of Western, after kind of Bucktown and Wicker Park filled in. So it's really exciting for that neighborhood. But I agree, it's definitely one of the hottest neighborhoods in the Chicagoland area, inside the city or outside.
Kim, do you think is it too late for buyers to get a good deal in Humboldt Park?
No, I don't think so at all. I think there's still great opportunities. I was just talking to an agent just this week about sort of there's a little pocket just west of Humboldt, you know, where you can get really good, decent single-family homes in the, you know, 400,000 range, and that seems pretty affordable for the city of Chicago.
For sure.
So there's definitely still opportunity out there.
So Humboldt Park is definitely a neighborhood to keep our eyes on in 2019. Let's talk about the suburbs now, and another town that I would say is outperforming the market, and that's Elmhurst. Average sales price there is up 5.6%. You know, it's not the 25%, but it's still beat the market. The median price was up 6.5%. Prices are 41% above the post-crisis trough. So we see some suburbs in Chicago that are still trying to make it back to par, but Elmhurst has beat and exceeded the high water mark. Jim, I'll ask you, because it's your stomping ground. Why is Elmhurst doing so well?
So I think there's a lot of reasons, Peter. I think first and foremost, you have to look at the location of Elmhurst, right? So globally, where it sits is perfect access to north, south, east, and west. All the thoroughfares meet right in Elmhurst, 290, 88, 294. So you have easy access to the city, and of course, you're on the commuter train line. So the drivers are there that's attracting consumers to this marketplace. That, sort of coupled with the new construction boom, has really put Elmhurst on the map.
Yeah, new construction. Our numbers show that there was, I thought this was interesting, 3 times the number of new homes sold in Elmhurst versus Hinsdale.
Well, and what's interesting about that is that if you look at the average sale price of that new construction, Elmhurst is just slightly over $1 million. Whereas in Hinsdale, it's north of $2 million. And while they're different markets, there are a lot of amenities that attract a similar type of consumer, so they see a value play in Elmhurst that I think is fueling activity.
So let's go from a suburb where we see a lot of new homes to one where there's a lot of older homes, and that's Lake Forest. In Lake Forest, what we've seen for a while now is pricing and sales kind of flat, but the number that really jumps out at you is month supply of inventory. 11 months worth of homes on the market right now. Now, I was talking to Carrie Cook-Falls, who's our managing broker out in Lake Forest, and she said if you have a cream puff, which is a new home in perfect condition with impeccable decorating, it will sell before it even hits the market. But that is not what most sellers are finding out there, and it seems like the real issue is the older homes. Why are sellers having such a tough time with older homes?
Yeah, I think it goes back to people not wanting a project, and I think that runs from the city to the suburbs. Is that most buyers today want to walk in, move in, and have it be done. And I think Lake Forest is an incredibly beautiful community. The lots are larger. The lakefront there. It's a gorgeous community with a lot of resources, a lot of great infrastructure, restaurants. But a lot of the homes are older and haven't been touched in a long time. So I think that it's struggling because a lot of the sellers don't want to necessarily put the money and the work in because A, it's a big investment, and B, they don't know exactly what the buyer is exactly going to want, and the buyers don't necessarily want a project. So they're stuck in a little limbo right now. To me, it's a great opportunity. It's a great opportunity for a buyer to get into an incredible community at a great price and with a great piece of land, great house. But you got to be willing to put a little bit of elbow grease into it.
Yeah. So I do think that people are going to go back and revisit Lake Forest. It's a little bit longer in the train, morning and afternoon, but at the end of the day, it's an incredible community with fabulous housing infrastructure. It's just that some of those houses need a little bit of love.
So in a market with a lot of supply like Lake Forest, you'd expect to see pricing kind of flat. But in a market that has very little supply, you would expect to see prices increasing. That's not what we're seeing on average, at least in North Center. So in North Center, the average price last year, average sales price, actually fell 2%. And that's just the average. But we saw unit sales down, but we also saw 3.3 months worth of supply, which is very, very low. So what's going on? Kim, you live there.
Yes.
What's happening in North Center? Why is this anomaly occurring?
Yeah, I really drilled down to kind of look at the data, and because it really, the numbers just didn't tell the full story. So the numbers that I was looking at, in the last 6 months, we've sold 100 homes approximately with a price range from like the 350 to well above 2 million. And average market time, like you said, is 108 days. Average sale price, this is all single family homes, 3 bedrooms, 2 baths or more. Average sale price was over $1 million. So that seems to me like a pretty strong market. And if you just look at single families above $1 million, we still had over 56 sales in the last 6 months. So I think there may be a little bit of compression of pricing from 2 years ago to last year to the last 6 months, but market time has actually gone down. And so I think it really is just a slight compression, but not like a slight flattening maybe, but I don't think there's anything to be concerned about. I'm very bullish on North Center.
Finally, let's talk about Lincoln Park, because 2018 was a record year for uber luxury sales. We're talking about sales at $4 million and up. Cranes reported there were 73 of those sales last year. 13 of them took place in Lincoln Park, including a $12 million, $11.9 million sale of a home on Burling. Does the party keep going in 2019, Mike?
I think yes, without a doubt. Lincoln Park is the hot neighborhood in the city, and it's if you look at where you're going to, especially for single-family homes, where you're going to live, it's the best neighborhood is Lincoln Park. If you go in the condos, it's maybe Gold Coast, but those two neighborhoods are considered the premium neighborhoods to live in. I think that people are constantly attracted to the best quality and the kind of best of the best. They have very, very strong schools. So if you want your kids to go to public school, it's a great school system. They have great housing stock, and they're by the lake. They have all the things going for them. I don't see that market weakening.
Thad, you had mentioned something the other day where you were talking about the spread between perfect and less than perfect. And so while we might be seeing a record number of $4 million sales trade hands, if you've got that 10-year-old house, those sellers are really struggling.
Yeah, it's what's interesting in Lincoln Park is that the buyer is willing to pay $3.6 million for a single-family home that's 5,600 square feet, brand new. But the same exact house that is 10 to 15 years old on the same block is usually in the mid-2s, and we've seen some hit the low 2s. So buyers are so in demand for exact perfection that they're willing to pay for it. So there is a great opportunity, believe it or not, in Lincoln Park to find a little bit of a dated home that has good bones, good infrastructure, and just needs updating. There's a lot of premium to be made there.
It's flight to quality, and particularly if we're going in a little bit of a cycle, you're going to see more of a flight to quality.
Parting shots, 2019 spring market, and any words of wisdom to buyers or sellers out there?
For sellers, I would say get ready. Get your house ready, get it prepared, get it dialed in, make sure it's as perfect as it can be so that when you hit the market, you've got the best chance of selling quickly, because quicker selling means higher price and less stress.
I would say, but don't make the change until you've talked to your agent. Don't guess what the market is. Talk to your agent to get the inside scoop on what buyers are looking for.
I agree.
Yeah. Yes. Let's talk and listen.
And I would say don't be so intent on listing when you think everyone else is listing, right? Right in that spring season when things start to pop and things are in bloom. Sometimes putting your home on the market prior to that, can be beneficial and ultimately source you a more motivated buyer and maybe a higher sale price.
Yeah, if sellers are ready to go, it sounds like buyers are out there now, and
For sure.
we're getting a little bit of an early start on spring market. Dad?
So one important thing to remember if you're selling a home is that all first showings are online. The bottom line is that a buyer or a prospective buyer is viewing your home online first, and if it passes the smell test, they're making an appointment with a broker to view your home physically. That means that you should put a lot of pressure on your broker to make sure that they have your home presented in the best possible light online. Floor plans, digital walkthroughs, fabulous photography. The way your house is presented online will only increase the number of personal appointments made. More personal appointments made, in all likelihood, the faster your home will sell, the higher price.
Well, those are all great points, and it sounds like we've got a really busy spring market ahead of us. Thanks for joining us, and we'll see you next time at the market.